Hey, what's up, guys? So, today I wanted to make a quick video just talking about even after a day like today where Tesla stock is down almost 6%, down to 225 now. Who would have seen that coming, right? Why I'm still buying this stock. I originally started buying this stock in my long-term portfolio at around about 300-ish or so. And I buy stocks as as I can from when I get paid because I'm just currently just working just a regular job. So whenever I get my checks, I set a certain portion of that aside to buy stocks. And as of lately, the only stock I've really been buying is Tesla because out of the other stocks that I own, like I own a little bit of Apple, I own some Facebook, I also own. I used to own 10 cent. I wish I still owned it because I bought it at like $36 a share and sold it at like 42 or something like that. But might be looking to get back in 10 cent. I don't know. But yeah. Anyway, so going back to Tesla, right? The reason why I'm still buying it is because of many things, but I wanted to speak on one thing in particular, and that is my personal risk to reward ratio of what I feel, as far as like is my personal risk to reward when it comes to this. And what brought this to my mind is yesterday while I was at work, I'm listening to I love listening to audiobooks, right? And so I'm listening to The Intelligent Investor, and I believe it was the last chapter. They don't quote me on nothing that I'm saying here, but they they talked about just basically what your risk to reward is as far as your own personal investing mindset and everything goes and stuff like that. And one thing that they said in the book was a good way to think about, a good way to kind of determine what is your true risk to reward and how you will really react to buying a stock and everything like that is look yourself in the mirror before you buy a stock. Look yourself in the mirror and say, if I bought say $1,000 worth of whatever stock, and let's say that stock fell by 10%, 20%, 30%, could I look myself in the mirror and say to myself, I'm still glad I bought this stock? And for me personally, this may not be for everybody when it comes to Tesla stock, and that's perfectly fine. But for me personally, buying Tesla at 300 some dollars a share, I looked myself in the mirror and I said, I like this. Me looking myself in the mirror, buying Tesla shares at $280 a share. I could look myself in the mirror. I'm not saying I did do this because that would be kind of weird to keep looking yourself in the mirror every time you buy something. But hypothetically, in my mind, I'm thinking, I'm looking myself in the mirror and I'm like, I'm okay with this. And looking at Tesla shares now down to 226 when I originally started buying at the 300 range, I'm looking myself in the mirror and I'm like, I wish I would have just bought even more and more and more. And that's what I'm doing. So I actually just bought some more shares today in my long-term portfolio. And in my Robinhood portfolio, I actually bought just one share today, but I bought a few more shares in my long-term portfolio. Now, of course, like I said, I'm just working a regular job, so I gotta be careful with exactly just how much I just keep throwing at stocks and stuff like that, and when I do. But looking at Tesla shares trading at 226 today, man, I just can't hold back on that. I would shoot myself in the foot because here's the thing. Look at this, right? Okay, we're on a 1 minute chart. Hold on. I never go out to the 1 minute chart. I just thought it'd be fun to look at while I make this video. But let's see. Of course, it's gonna move slow while I'm recording because that's what always happens when you're trying to show somebody something. Things always act up. Maybe I should. Let's try. Okay. So anyway, while that loads, if it ever does load. Okay, here we go. So here's the thing. I bought Apple at around about it was 170 something, so it was a little over a year back. So I bought, or it might have been right in here. No, no, somewhere. Okay, anyway, I bought Apple shares at around about 170 something, right? It shot up to the 233s. I was like, woo, yay, making money. It's all great. And then here came the October, November, December, just market crash. We all remember the crash back in December, right before Christmas. It was like a Christmas miracle for anybody who could have took advantage of the opportunity to buy more stocks. And I could have took advantage of this. I had money to buy more Apple shares. And I said to myself, I'm just going to wait. And I waited, and it came up, and I'm still waiting, and I'm still waiting, and I'm still waiting, and I'm still waiting. And I just never took advantage. And I remember telling myself, buy, buy, buy. And I didn't. And so then here is, what's another stock that I actually, thankfully, I bought some Facebook back in, I think it was November or December, one of the two. So I did take advantage of some lower prices on Facebook. Nvidia, here we go. Nvidia, from a high of 292. I'm still loving Nvidia at this 160, seeing as how I haven't started a position in Nvidia. But okay, looking at Nvidia back in December lows, down to 124 a share from almost $300 a share. That's over. Oh, come on now. Like, why did I not buy that? You see what I'm saying? So this is the whole point that I'm trying to get through with this video. And when it comes to stocks that I currently own, I'm up on quite a few. I'm down on quite a few. But one stock that I'm down on that I'm just like so confident on, as far as like longevity of where this company can potentially get to in the future, is Tesla. And I'm not about to sit here and shoot myself in the foot by not taking advantage of these lower prices, because I'm telling you right now, for me to buy this stock where it's currently trading and for it to even go lower, I'm going to be happy, because if it goes higher, if it goes back up into this $300 range, or higher eventually, and I see to myself that I never bought down here or any lower, but I just let it just kind of just move its way on back on up, and just let whatever shares that I currently own just appreciate and everything like that. But I never took advantage of buying down here, buying the lows, buying low, selling high type of deals, Warren Buffett investment type of thing, dollar cost averaging. If I don't do that right now, and I just sit and hold what shares I currently have, and those shares that I currently have appreciate, and I never took advantage. Once again, I gotta keep reiterating that if I just don't take advantage of these lows, I am going to look myself in the mirror, and I am going to say to myself, why didn't you buy? You had the money. Why didn't you buy? I don't want to do that. Like I said, I did that with Apple. And I'm sitting here just like, why did I not do it? And I don't want to have that same sort of regretful feeling again. Now, once again, I'm still keeping my head above myself, right? Okay, this video's getting to about 10 minutes. I want to cut this, but I'm still keeping my head above myself, right? To where I'm thinking like, okay, I don't want to get too far ahead of myself and just make it to where I'm just like throwing my entire net worth into one stock. That would be foolish. I'm not doing anything crazy like that. I'm not making Tesla like 90% of my entire portfolio or anything crazy like that. You know what I mean? I'm not about to do anything crazy like, leverage my home or nothing stupid. Okay, just long story short, just nothing stupid. Still keeping my head above water and just being realistic and being very mindful and thoughtful with my reasonings for buying this stock, even as it still continues to go down. And like I said, I can look myself in the mirror and I can say I'm happy. I'm happy buying Tesla at 226. Very happy. Wish I could have bought all my shares at 226, but it is what it is. That's investing. You can't control, pricing and stuff like that. All you can do is take advantage. So with that, I'm going to let you guys go, and thanks for watching. See you on the next one. Peace.